Are you or your clients looking for a regular income solution with compelling returns to diversify your portfolio? If so, Neighborhood Holdings may be a great option for you. Listeners of this podcast will appreciate that public markets can be turbulent and finding a good private credit fund can be tough. But Neighborhood's track record, transparency, and investor alignment sets it apart from the pack. With nearly 10 years of consistent performance and a target net yield of 8 to 10%, Neighborhood has a track record of providing monthly income to investors without the volatility of public markets. How do they do this? Where banks invest in mortgages up to 95% loan to value, they also make borrowers jump through a lot of hoops. Many borrowers in transition aren't able to meet those hoops. Neighborhood has partnered with banks and brokers to provide quality borrowers with temporary financing secured by first mortgages at an average loan to value of less than 60%. Where other mortgage funds might take more risk by lending against construction, bare land, or jumbo loans, Neighborhood is focused on your average residential borrower who owns the average house in the neighborhood. Plus, their variable rate with a floor mortgage pricing benefits investors when interest rates go up and mitigates downside risk. Check out the link in the description or visit neighborhoodholdings.com to view the offering memorandum or speak to your financial advisor for more information. That's neighborhoodholdings.com/Loonie Hour. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin. Hey, there's a bubble. Welcome back to Loonie Hour, episode 168. As always, joined by the three amigos, Boomer, Pete Dicker, Rich Diaz, back in school there. What's going on?
I'm back in school. I'm back in Portugal. Longtime viewers and listeners of the Loonie Hour will recognize the locker room. I'm in my aunt's compound, which is really awesome. It has excellent internet, so Keith's happy. But yeah, no, I'm here for a couple of weeks to celebrate Christmas, which was really, really wonderful. The weather is fantastic. I heard Montreal got 15 centimeters of snow, and it's up here. It's 18 degrees and sunny. So I've just been biking and messing about. And then tomorrow on the weekend, I'm gonna go on the tractor and hang out with some cows and sheep. How are you guys doing?
Man, I gotta tell you, when you get older, hanging out on a tractor with some cows and sheep, like that seems like a dream afternoon for me.
It's really fun, man. I'll tell you, farmers, I know politicians all over the world are trying to crush farmers. I hope we push back on that. I think what these people do is really incredible. And the idea, like I know they work really hard and often for meager wages. But the idea of just being sort of in charge of your own destiny is something I find really quite romantic. And yes, they work really, really hard, but it's amazing. It's an amazing life. It's hard. It's a hard life. Make no mistake about it. But it is amazing as well.
Boomer, it's new.
Well, we had Christmas. I'm not going to talk about all the Christmas gifts, but I got a really cool book, Rich. It's a book about anti-gravity. It was really hard to put down.
Oh, was it? Are you kidding? Oh my God.
Good for one of us every episode.
Yeah.
All right, Steve. And how about you, Steve? We got the wee one and everything.
Yeah,
the family.
I got a new podcast mic from the Loonie Hour, and then I conveniently forgot it. So I'm for the first time ever in 3 years, I forgot my podcast mic. I always give these guys a hard time when they're traveling and they forget. So yeah, that's my bad.
But we haven't had a mic drop or anything for a while. So that's not bad way to end the year.
Yeah.
But set us up, Steve. 2024 is over. It's been a great year, for us getting together every week. So many incredible things happening. It's been pretty good for some people, not so good for other people around the world doing different things. What are we doing today? Where are we going?
I just figured, I mean, obviously, like news flow is pretty slow, pretty quiet. So figured we'd just kind of do a little recap of 2024 and kind of what we're keeping an eye on heading into 2025. But I don't know about you. I mean, certainly in my space, in the real estate sector here, it's been, I think, the year of volatility, and I don't know. I mean, we'll get into kind of the outlook for 2025, but I think volatility in Canadian housing. We've certainly seen volatility in Canadian politics. Yeah, it's been a crazy year.
We have volatility with Rich, like moving around and biking and all that stuff as well.
Yes,
That
I
is a
have
good
this.
theme.
There's been a lot of volatility in my life. Let's hope that 2025 is a bit calmer. Can we just take a second to hyperventilate about the fact that we are a quarter way through the century? Is no one else freaking out about that? I remember Y2K and like year 2000 and like, anyways, I guess I just think it's absolutely nuts. We're a quarter of the way through the century. No, everybody
Okay,
seems
let's
really
do a
calm
little
about this.
online poll right now. Hands up who is actually thinking about we're quarter way through the century.
It hasn't
I
crossed
am.
my mind once.
Me neither, man.
All right,
Rich.
fine.
That's why you are a gem. You are a treasure for us and the country.
All
But
right,
but if the
Lady
theme is
farmers.
volatility, which I think it was, it wasn't one market or factor or something that was volatile. Everything was insane this year in a good way, in a bad way, interesting way, and stuff like that. And I mean, obviously, Steve, you're in the real estate world, but you've also been covering the long-term rate market quite a bit. Like whenever you connect with me during the day, it's like, hey, what's the 10-year doing? Can you see it? Things like that. And I see that. It's just an amazing journey, not Aerosmith. Yeah, I got to recycle the same joke. But
Yeah.
but the trend that everything went on this year, and one thing, this is just my view, but sometimes when you get a lot of volatility, then you'll get a stagnant period for a while afterwards.
Mm.
I don't think that's happening. I think as we go into 25, it's going to be explosive again. And explosive can mean good things as well, by the way. I don't think it's, it's horrible. I think now we're set up for some really interesting experiences in, financial markets, economics, and all that stuff. So how do you want to hit it? You want to spin the wheel and like pin the
Well,
tail on,
yeah, I mean, I
Rich?
think it's just interesting just to on the sort of summarization side, right? I mean, Rich, just on sort of one of the core themes that sort of played out this year was I remember having a conversation with our mutual friend there, Keith. It was Ritesh Jain, Pinecorn Macro, I think. Anyways, we had some good conversation. This was like a couple years ago, and we were talking about like the over leverage, the speculation, the real estate bubble that basically has been allowed to accrue in Canada. And make no mistake, these are policy decisions. Like the housing situation that we have today is strictly a function of policy decisions, and policy decisions not just over the last couple of years, but over the last several decades. And so these are policy decisions that have been allowed to play on. And at some point, we all knew it was going to reach sort of a pinnacle, and that they would have to, monetary policy, fiscal policy would be stuck with a decision to make, which is, okay, how do we manage this? How do we sort of alleviate the fallout from this buildup, right? I mean, it gets bigger and bigger and bigger, and the larger it gets, the more destabilizing it eventually becomes. And so one of the ones we discussed was that the Bank of Canada was going to have to, at some point, was going to have to basically come in and try to essentially bail out the over-levered household and corporate sector that had taken on an enormous amount of debt. And the Bank of Canada would be forced to cut interest rates. And, the result of that would be that they would ultimately sacrifice the Canadian dollar. So the Canadian dollar would basically be what we call the release valve, to essentially bail out households. And so what you get is basically a currency which is devaluing or debasing. And so what you see is it looks like, well, house prices really haven't dropped that much. Maybe they've dropped from the peak, let's say 10%. And this is on a national basis. There's pockets in the GTA, sure, that have dropped more than others. There's pockets in the Vancouver that have dropped more than others, but let's just call it for what it is. It's about a 10% drop. But then from there, you have this ongoing sort of currency debasement, which is basically, it makes house prices look like maybe they I mean, for the last 18 months, they've almost basically stopped going down. And so you have this sort of nominal flatness in home prices. But in reality, they're actually really falling in real terms. They're falling in US dollar terms. They're falling in, when you measure it in ounces of gold or shares in the S&P. So in real terms, no one is getting wealthier, but at least their balance sheet, you know, doesn't look that bad because the denominator, which is the asset value, is staying elevated, and that's what's important for the banks who have ultimately lent loans against your house, which, you know, your house is the bank's collateral.
It's because we live in a nominal world, like a material girl. I mean, I think that's a really, really fascinating point. And I think you're right. I think I mean, you're the one who showed us, I mean, these incredible debasements relative to gold and Bitcoin and pounds of coffee. And I think, but going forward, Steve, my question to you, do you think we will get a continued decline in real terms? Or do you think that it'll just be sort of more of the same? Let's not project too far. Let's just say like over the next year or maybe two. I mean, did you see more of the same, and so we
I think
see
it,
that
yeah, I mean,
stabilization in normal terms?
yeah, I think, yeah, I'd say like, I think in real terms it's declining. I think in nominal terms, I think, you know, that's, we'll see how that plays out. I mean, we can get into kind of the details of, I think, the outlook for Canadian housing, but I think that's what's happening. I think just people have to sort of be sort of imaginative and kind of step out. Like, it's crazy to think, right? I mean, like, think about it, like 20, 30 years ago, you could buy a house on one salary, you know, husband or wife stays home with the kids. Now today you can have two full-time working people. They can be in the top 10% of income earners, yet they can't afford a house. You know, they can't afford a house. Like, the houses aren't getting better. It's just like you know, your wages aren't keeping up with a manipulated CPI basket. And really, I think you have this massive devaluation. And so one way to look at it is just, my favorite one is you look at it in ounces of gold, which is, you know, that's real. It's real money. It's been money for what, Rich, 1,000 years? I mean,
Much longer.
yeah,
6,000, 7,000 years.
it's crazy. I mean, so that's, you know, if you look at ounces of gold, you take Vancouver real estate, you take Toronto real estate, I don't really care which one you use, but I'll give you Vancouver's, for example, is if you look at, so home prices in Vancouver actually peaked in 2007 prior to the GFC at 1,236 ounces of gold. It would cost you 1,236 ounces to buy the average house in Vancouver.
What year?
Today,
Sorry.
1,236 ounces.
What year? Sorry. What year?
07.
Okay, gotcha.
Yeah. And today in 2024, it costs you 568 ounces. So it's dropped by more than 50%. That's just one way to look at it. You can denominate it in, you know, even US dollars. The chart doesn't look that bad. You know, people say, well, I don't earn US dollars. I don't earn in gold. Well, it's like, yeah, no, you don't. You know, you're being screwed, right? I mean, wages just, you haven't, there's no other way to put it. I mean, and when I look at it today, people say, well, you know, how can the incomes support it? I mean, what it's turned into is that's actually turned into this wealth-based market where there's nobody, like very few people that I know and see and work with today that are like, oh, I just worked for the last 18 years. I saved up 20% down payment. I bought a house. Nobody's doing that. It's all, they've created wealth through other asset creation. You know, maybe their shares in the S&P 500 went up. They had parents that owned a house. They gifted them money. So it's just a circular. The houses aren't really trading off of incomes anymore. Sure, the debt servicing might, but like the down payment is trading off of, it's trading off existing wealth that's been created. And Rich, we know you've highlighted this during the pandemic. What was it? 20+% of all dollars in circulation were created during the pandemic.
Yeah, it's crazy. Well, this brings me to a question, Steve, just really quickly. So speaking of, we're doing sort of a recap and then sort of we're doing a projection forward, but do you think 2024 is the year that the like housing zeitgeist broke for Canadians, where we sort of realized it's a bit of a, not a scam, but you know what I mean? Like,
Yes, I mean, like, I think it's almost fair to say it's kind of a Ponzi. I mean, it is what it is, right?
But is this the year where we finally say, not that valuations are going to tank, but that there's been a kind of a break in our own psyche as Canadians? Do you think that's fair to say? Or is it 2023, or is it going to be next year? Do you know what I mean?
Yeah, I feel like it's starting to set in, though. I always try to like remind people, though, it's like everyone just like started penciling in like infinite returns.
Yeah, exactly. That's what I mean.
It's funny because like there's smarter people than me that, like, you know, you could just model it out and like, okay, if we assume a 6-7% return on your condo every year, It was like,
Forever.
yeah, it was like by 2040, like your condo in Toronto would be like, your starter condo would be like $2 million. You're like, well, that's just not going to happen. And we've had pockets of the real estate market in Vancouver, like very nice pockets of real estate that have not moved in valuation for 7 or 8 years. And so I was like, well, there's parts of the market that haven't, like good parts of the market that haven't moved in 7 years, 8 years. Why should your condo, your suburban condo continue to move higher? Like at some point, is it? And so I think obviously we've hit that pretty much for all the market types in 2022. And how long it takes to get back to that ultimate peak. I mean, I think it could be a lost decade, and that will be a very painful lesson for a lot of people, but it's happened before. And I think it's probably the healthiest outcome for that, for this
But
country's housing market.
just to jump in here with this, I mean, you mentioned the lost decade. The challenge that everyone has today in our world is that they only have short-term memory. That's it. And most can't even remember yesterday. They wake up and they go on that way. But literally, with the housing market, when did the housing bull market start? And people say, oh, I've been, houses for 10 years. They always go up 6%.
Yeah, about early 2000s, it kind of restarted, right? It went sideways for the decade in the 90s, after kind of peaking in the late 80s, and went sideways for about a decade and started reigniting in the early O's, alongside the US, of course, which had their reckoning in 08.
But in 08 and 10, that's when everything should have reset.
Mhm.
And we should have had a correction in housing up here in places like that. And so because of that lost decade, with everyone doing QE and zero rates and negative rates and all that stuff, it just created this decade plus of of an experience where most people, it doesn't matter if you're in housing or the stock market or whatever, people base on the experience from those 10 years is what should be expected every 10 years. So that brings us now to 24, of course, and going into 25, what I think is going to be an amazing year. So people, if you always have the expectation that your house or whatever you own is always going to go up 6% or 12% or whatever percent it's in your mind, I think I think you have to step back and really look longer term and think about, okay, what were the factors that set up that period to have that experience? Was it a real, was it a price? Was price discovery open? Was it suppressed? Was it a true market in this or that?
Mm-hmm.
The Canadian housing market, is that a normal growth period? Is population growth always going to be extreme? All these different things were used to have one outcome. And what my belief is that we're never going to have the same conditions all the time. So therefore, expecting the same outcome all the time, that's just a little unrealistic. And I think a lot of people, when we have success with something, we'll always attribute it to a skill set. And you think, well, I'm really smart. I'm going to be able to keep doing this, on and on. And but it's interesting what happens when we trip up. And I think going into this coming year, some events and markets are going to change. That's really going to trip up some people, be an amazing springboard for others to make money on and enjoy life and everything. So just don't look in the mirror all the time when you're driving down the highway. You're going to hit something along the way.
I gotta jump in there because you mentioned a good point. People always wonder, like, oh, well, man, the US, they, 08, 09, they rolled over. Housing did a total reset. I think it bottomed in 2012. It took some time.
Yeah, 2012, 2016 for some markets.
Yeah, so I mean, some recovered earlier, some recovered later, depending on the product type. I think it's kind of a similar dynamic that we have today. But like in general, it peaked in 06, Rich, and then kind of bottomed about
10 years later.
Yeah. So, but in terms of free markets, people say, well, what happened in Canada? People, it wasn't because the Canadian banks were necessarily so strong and amazing that there was no housing reset here. We actually brought in a lot of programs. So it was the Canadian government brought in a program called the IMPP, the Insured Mortgage Purchase Program, where basically CMHC, it was a CMHC program They purchased up to $125 billion worth of mortgages off of bank balance sheets and basically pooled them and securitized them. So this basically freed up, is in sort of simple terms what it did. It took a lot of the sort of bad mortgage loans off the bank's books, or mortgage loans in general. It freed up lending capacity for them to continue to lend. So if you actually look at like there was no deleveraging in the Canadian household sector, because they were able to continue to keep borrowing. And so if you can continue to keep borrowing to buy real estate, obviously, your house prices go up. And so that's why Canada, I think house prices dropped for about 12, 15 months, and then started rising again in 2010. And of course, then you hit 2015, which, during that period, we also had record low interest rates.
Which are going to stay low forever.
We had those record low interest rates. Then you had 2015, which is, you have like, I think this call it almost like a one-time event, which is you had record outflows from China, record capital flight, that just so happened to coincide that they love real estate and they wanted to put it into safe,
their own real estate market.
Yeah,
Sorry,
Western democracy, and they flooded not only U.S. markets but obviously places like Vancouver and Toronto. And then you had so then you're still looking at zero interest rates with peak China capital outflows, and then you have the pandemic, which was, hey, listen, 17 or 18% of all mortgages outstanding were told they didn't have to pay. They said, oh, you can just defer your mortgage. You don't need to pay it. So people, 18% of all mortgages outstanding were able to defer. And then, so like these are not, it's been the kind of like the perfect storm for house prices. There's been so many like things that have basically come in and supported the valuations. And so to continue to expect that moving forward, I mean, I think but people have expected this to be the norm.
But wait a second. This brings me to my first prediction of the episode. I predict that politicians in Canada will continue to do absolutely everything in their power to prop up house prices.
Well, they'll probably find a way to do it. But I think though the theme of the gist of this conversation is that, hey, like, everyone's made money on the housing market. I've made money on the housing market and so forth. So I don't have any bones to pick with it at all. But again, the conditions that were set or established for that success, it just can't continue indefinitely, because there are conditions that are put in place to create an unrealistic market. Now, for example, Vancouver, the experience in Vancouver have been incredibly different than what they are in Halifax, for example, or outside the GTA, or like Calgary's been lagging Vancouver forever, I imagine, right? And now, but not for the previous 15 years, I would imagine.
Can I say something? First house I bought in Calgary. I bought it in end of 2019, like just before the pandemic started in 2020. And I bought it it was a single family house in like an inner city neighborhood, like a nice trendy neighborhood. People want to be there. Bigger lot, crappy house, basically tear down. And that sold, we bought that one for $420. It was $420. And I bought it for $10,000 less than the guy had paid in 2007.
Jesus.
So like,
crazy.
You know what I mean? Like there's like, and yeah, I remember people saying like in Vancouver, like, oh, you're nuts. Like, why would you buy over there? There's no growth. It's dead market. It's flat. You got to go to Vancouver. Just keep piling your money into condos here. And so again, it's just kind of that recency bias, right? Because like, well, Vancouver condos go up 7-8% a year. Why would you buy?
Whoa. You're saying recency bias is a thing?
Sorry, have we talked about that this episode? I can't, my short-term memory.
Okay, what's next? Let's move along then. We know where we are with the housing market.
No, we know where we are, but I think just this kind of leads, I guess, to maybe my next topic of conversation, Keith, which is what's propelled a lot of this is the factors that we've discussed, and not necessarily free markets. One of those free markets that we think has been suppressed has been probably, I'd argue, the sovereign debt market, monetary policy, keeping interest rates low for almost 2 decades. We're now at a point where that seems to be reversing. I mean, I think the days of 2% mortgages in Canada are seemingly gone. And so, again, that kind of factors into the future growth story. But one of the ones I want to talk about today is the US and what's happening. So everyone keeps talking about the Bank of Canada, oh, they're cutting rates, housing's going to re-stimulate, but we have seen no movement really in the fixed rate side. The Canada 5-year bond, which prices these fixed rate mortgages, has been, I think this year, so you got 125 basis points of rate cuts from the Bank of Canada. I think the 5-year bond yield.
No, 175. Sorry,
175 basis points. The 5-year bond yield down like 10 basis points.
Crazy.
That makes no sense. How did that happen?
But so, like, you look at that and you say, well, okay, well, you got to look at the Fed. I mean, if you look at the Fed, Rich, they've cut 100 basis points, and your 10-year yield is up, I think, 100 basis points. So, like, your long end is moving higher. Basically, what is that? I mean, I think it seems to me it's like the bond market, the bond vigilantes are saying, hey, listen, we don't think you should be cutting. We don't think necessarily that inflation is dead, and longer bond yields are pushing higher.
Yeah, well, I mean, that's one of the themes I think that Keith wanted to talk about, right? Because this year is about really what happens next year to the bond market. And one of the things I thought was really interesting as far as themes going forward was really sort of this sovereign debt cycle, the race to zero. You talked about bond yields, but also that political angle, which is the slew of governments that have basically been unable or unwilling to basically run balanced budgets, and how that will knock on to higher inflation going next year. And then, of course, the 10-year bond yield. So I think it's all sort of related.
It's all related. And I don't know which one to jump into first, really. I mean, we're not going to go deep down the Canadian political rabbit hole, but people can correct us. They seem to enjoy doing it all the time these days. But it's my understanding, if the Liberals do try to, if Trudeau steps down and they decide to have some kind of a leadership convention, it could take up to 3 months for this to happen. I don't know if something can be expedited, but we could be in political limbo here, for a while and what that means is major decisions may not be on the table. So we'll see where that goes.
It's just kind of crazy, just to interrupt, when you're facing, Trump coming in with proposed tariffs, and you have no real government that's really running the show to actually negotiate. I don't know. Yeah, that'll be, again, probably a core theme of 2025. But Keith, continue.
Yeah, so let's just start with, so my biggest theme the biggest theme that I think has the best opportunity to develop next year, and to make it very simple, is this extraordinary amount of unexpected positive growth in the US, which is sucking capital in from everywhere else, which is going to result in everywhere else, including Canada, having a very weak currency. And the central bank is going to be hamstrung. They're going to have a decision to make, whether to raise rates to defend the currency, which is what they just did in Brazil, I think was the last week. I think we brought that up. And so I think this momentum that the Americans could be similar back in 2016. It can be rock and roll, right? I don't know for how long, but it won't be for a long time. But then after that, I think then, as sort of they call it the sugar rush will wear off. And then the American economy then will be, fatigued, and, they're going to have their own challenges as well, which should then align them with the rest of the world. So I think from an economic perspective, I think the Americans can just bolt out of the gate in 25, and it's going to have a huge impact everywhere on all markets. So again, I mean, we were always Canada centric, but again, we have to appreciate what's happening elsewhere. I mean, like the conversation last week, Steve, I know you brought it up, but Canadian dollar was down like 7-8%, so far over the last few months. But so was the euro and pound and yen and Aussie and everything else. So there's lots of opportunities for this to run further. But again, I think the Americans can just go nuts out of the gates here in Q1 and Q2.
Rich, were you highlighting a chart though that the Canadian dollar had sort of underperformed against other basket of currencies as well?
Yeah, I mean, so it's always about your time horizon, and I think a lot of the discussions that people have, a lot of the disagreements people have in capital markets are about time horizons. And so when, I mean, the data is unequivocal, but from September, the beginning, I think it was Keith laid out from the beginning of September to now, the Aussie yen, Kiwi, all these currencies have basically moved in lockstep. I think the chart that I was sort of highlighting is a much longer term horizon. And you can see that over the last few years, the steady sort of decline, and I just use steady, I was looking at the 200-day moving average, which is just sort of a trend indicator. And you can see that basically against the pound, we were, 0.64, now we're at 0.56. Against the euro, we were at 0.74, we were at 0.67. US dollar, forget about it. And Swiss franc, my goodness, you know what I mean? And so that to me is an unequivocal trend lower. I think it reflects productivity. I think it reflects the housing recalibration, things we've talked about. I think it reflects, bad governance. Shout out to Dylan. It reflects, different, it reflects different things. And of course, interest rate differentials, et cetera. So yeah, that's where I think that there, if there's any sort of disagreement, that's really where it is.
So I think no, but it's a
horizon.
good point. So longer term, Canada, we are deteriorating, and that is getting reflected in the currency based on, and these are cross rates, by the way. That's what Rich is referring
Yes,
to.
thank you. Excuse me.
And yeah, the other conversation we're having was from the end of September, and it's really, that's when markets really pricing that Trump would win the election from that time onward. That's when it looked increasingly likely that he would. So this latest decline in currencies is really a strong U.S. dollar story, and that's what I think will carry into here when he comes into office in January, and then things push off. But the good thing is, though, I think Canada, we have such an amazing opportunity to turn this around. So we just have to make the right choices and decisions.
Rich,
I mean, in terms of,
the abundance of
sorry, go
natural
ahead.
resources in Canada. I mean, this should be a very wealthy country.
I mean, it is a wealthy country. It is
But
a wealthy country.
It should be even more wealthy.
Yeah, yes, absolutely. I think, I mean, make no mistake, we are one of the richest countries on a GDP per capita basis, although our growth has stagnated or not
Especially if you
declined.
take the pension assets, Rich, and then you net them out.
Especially if you take the Canadian pension plan assets, which, by the way, is a total canard. You should never do that. But I mean, Canada is a very, very rich country. I think, hopefully going forward, I think we'll start to lean into that. I've made the analogy that Canada is like a trust fund baby, and there's different types of trust fund babies that you'll come across. One that works very, very hard to sort of build the wealth of the family and the legacy. And there's other trust fund babies that just sit on their laurels and do nothing and make bad decisions and go skiing all the time and don't really contribute to anything ever. But what I do want to mention is that
Rich, there's a bully. There's a bully in your classroom just crept up next to you.
Oh yeah, I know. My uncle doesn't realize that I'm doing the podcast right now, but it's his house, and he's.
I thought he was going to jam you, shove you into one of the lockers there.
No, I think he doesn't even realize actually that we're doing the show. But
when I was a kid in high school,
I totally lost my train of thought there.
There was always some kid in high school got stuffed in a locker, and they would just lock it, and you would never get him out.
Can I mention a couple of other things that happened this year? I think they're really interesting, which is the emergence of AI. I thought that was really fascinating. I thought the decline of China, that was also sort of a really, really big, that's a really big deal. I think that how that's going to play out into next year, I think is something that will definitely.
What's he doing?
Oh, sorry, everybody. I was trying to keep focused, but I lost my train of thought. But yeah, just we're talking about things that happened this year. I think were really, really important for capital markets, and things we'll definitely, I think, we'll be talking about more next year are sort of the emergence of China, sorry, excuse me, the decline of China, the emergence of AI focus, something we didn't talk at all about in 2024, which I think will be a huge sort of issue or theme in 2025 is commodity prices. I mean, we always talk about oil, and that's been sort of a bum year, but agricultural commodities have soared. Coffee, cocoa, meat prices, damn you. The
Eat the
conspiracy
bugs.
theories. Yeah, the bug conspiracy comes back
Eat
again.
Z bugs, eat Z bugs.
But how that plays out is really incredible. One group of commodities, excuse me, that did not rise is the grains. So they've actually been relatively stable. But that's been sort of a really sort of an interesting phenomenon. But yeah, all right, pick up where I've bottled this, boys. Please help me out.
Okay, so but what's your main what is making you excited then, Rich, for 25 from a market perspective? And it could be something that's going to go down hard or up really strongly. What do you think?
Yeah. Well, I mean, one of the things I think people don't realize is virtually like every single stock market index did really well. And I think that I think breeds a real complacency. You know, there's a lot of talk about Bitcoin, obviously, that's done well. But basically, if you look at virtually every single stock market and sector has done extremely well this year. And as a function of that, you're seeing enormous amount of sentiment. And there's different ways of calculating sentiment. There's like investor attitudes and investor allocation. So how much you're exposed to cash versus equities. That's at an extreme level, meaning investors are basically all in on equities and very low on cash. Same thing with retail investors. And what I think is really interesting, not to be overly contrarian, but when you have that sort of combination of extreme performance, broad-based performance, and then sort of sentiment sort of coupled with that in basically a world where everyone thinks they're a genius and the markets can never go down, right when you have sort of a combination of weak economic growth and sort of sovereign wobbles and currency issues.
So this
all
is
over the
interesting because it sets up Steve's question, the conversation we have almost every day. So basically everything went up well this year except for one market, which everyone hates right now. So which one is it, Steve?
Canadian real estate?
Yeah.
No. U.S.
No,
Treasuries.
the long
Yeah,
bond,
the long bond.
like
Yeah, the
10
long
year
bonds.
or longer.
They don't seem to
So-
like Canadian real estate these days either.
No.
Yeah. So maybe
Almost
though
like
we
they go
have
hand in
this,
hand.
but we will so right now, by the way, when long-term rates are going up and the short end is going lower, it normally that's a signal of a healthy economy.
Yeah.
Right, that's what it is. So you make the argument that the outlook for the U.S. economy is quite strong based on that. Plus, credit spreads are they're still quite tight, and all these other metrics. In Canada, maybe not as much as you mentioned, Steve. The 5-year is pretty sticky. Is not going anywhere. The 10-year has crept up, of course, but we are into this world of extremes again. And I remember when I first started in the business, I think it was like 1875, Rich. It was a long time ago. But this one
JP
guy,
Morgan, you knew JP Morgan?
yeah,
knew JP
JP.
You and I are
Oh
buddies.
man, he was funny down at the old club. He was. But but one guy said to me once, he said, Keith, at the end of every year, if you sold all your winners and then bought the lowest performing mutual funds, of course, at the time, he said, you actually make more money longer term. I said, that's stupid. You always want to buy what's hot, right? Keep going. But life is coming to, so maybe again, we're not making investment recommendations or anything here, but I'll make a suggestion here, and everyone's going to crack and laugh and everything. But maybe one of the lowest risk return opportunities coming up is short Bitcoin and go long the 30-year in the
Oh my
US.
God. The comments section is going to
They're
explode.
coming.
The eggs,
But you can also say that relative to, the NASDAQ stocks or whatever market you want. And again, when we get these huge moves with extreme, same the currency world. I mean, the US dollar could come off 5, 6, 7%, pretty quickly. But it's in these periods when it just gets so exciting. Another thing as well, like a lot of people connect with me and they'll say, oh, why don't you put all your money in this market or in that market. And, professional managers, we're going to be diversified. That's just who we are. So, we'll get left behind when markets are screaming higher, but on the downside, we usually, hold on to value pretty well. And that's when someone like us, will take advantage of getting an extreme move downward because, we have the liquidity to do it and everything. But I think right now there are a lot of people around the world, running big money and they're just ready, they're licking their chops. And another way that they would hedge themselves, they don't have to sell all what you're holding in one market, but you can, for a very cheap amount, a very small amount of your capital, you can buy protection for yourself against the market. So if a market goes down 5%, for a very small allocation, you won't be able to make, 2, 3, 4 times that. And that's the kind of market we're in right now. So it's not a dulled world at all. It is exciting.
Keith, there's one other investor who's almost as old as JP Morgan and almost as old as you, which is Warren Buffett, who also has a record level of cash, holding cash. A record, what is it? Sorry, I can't speak English because I'm continually getting distracted here. But a record cash holding, which I think is really, really sort of an interesting sort of contrarian signal. Remember, every single retail investor, all the sentiment indicators are basically maximum bullish, and the world's best ever investor has a pile of cash bigger than he's ever had, which I think is just sort of an interesting wrinkle and something we should remember in 2025. One more thing, Joe, in 2024, which is the emergence of India. We never really talk about emerging markets. Keith doesn't like emerging markets. I'm not exactly a really big fan. But what we have seen this year is sort of the swapping. They've swapped places. So like, a couple of years ago, Chinese equities were the darling. China was the darling of the equity market. It did really, really well. And India, which is generally lagged, it's very expensive on a price earnings ratio basis. It is now totally swapped. So now as Chinese equities have really puked, the Indian equity market has done extremely well. And according to DataStream, its market value is now higher than Germany, France, and is just behind, I think, Japan and the United States, which is really, really amazing and kind of a remarkable change over the last, let's say, 10 years, 15 years. Sorry, Steve, I think you wanted to jump in there with something.
No, I was just thinking about India there. I don't know if you guys saw that article, but it a little bit off the beaten track, but India's investigating some Canadian colleges into a major money laundering case that is also tied to human trafficking across the Canada-U.S. border.
Oh, good. Oh, good. Another badge of honor.
So again, there's no AML in real estate, and I'm shocked if there is AML at the university college level as well. So that doesn't happen.
Not.
Well, we talked about that. There was it the UN, Rich? The UN that was saying that Canada was akin to almost was it slave labor they were calling it?
Yeah, I mean, I think that's a little bit of an exaggeration to make good a headline, but that's exactly what they said. I mean, it's still but
something to look forward to for 2025.
Yeah, exactly. The one, Keith, the one more thing I think, just back on Canada, I think back and related to the bond market and related to policy stuff is I get my spidey senses tingling that this inflation story is not done in Canada, and it's just something I could be wrong. Maybe a year from now.
Of the Canadian dollar, Ben Rabideau is just punching air right now.
I think so. I think so, but I think it's
does
also.
Does that mean if you're punching air? Does that mean you're not hitting what you're trying to hit? Is he missing?
Wait, does he agree with me or not?
No, he thinks inflation is not a story at all. I think
no, I'm not saying now. I'm saying it maybe.
Yeah,
towards
he
the end
suggested that the Canadian dollar would be potentially problematic in the back half of 2025, which could then stir up some domestic inflation. But
well, the reason I bring it up is because there's obviously a balance between sort of an out-and-out recession and a decline in real GDP that I think we will have in 2025. I don't think that's a surprise to anybody who pays attention to the show. So there's that sort of negative impulse, but then there's the positive impulses that I'm seeing, and they're starting to accumulate, which is energy price base effects, your favorite, Steve, the mortgage interest rate costs. By this time next year, those will be totally either wiped out just purely as a function of time and math. And then you have other input prices related to import costs related to the dollar. And then that's it. And so we'll see what happens. But I just think the idea that it's totally over and done with, and central bankers are amazing, and Tiff Macklem's going to stick the landing on inflation, I'm just not convinced. And I think it'll be interesting to see how they navigate that. But
I have some
yeah.
few more thoughts on housing. Keith, unless you want to jump in.
No, so I think we have our themes right now. Rich, actually, I don't know Rich's theme, but I was talking about how
short-term memory.
I just want to, before you go into that, I just want to reiterate, if the scenario develops that I believe is going to happen, with the US really sucking capital out of everyone else, again, that's going to create or put enormous pressure on our budgets or our budget deficits in Canada, Germany, and everywhere else. And it's going to be a real sort of moment in the bond market. So we could have a scenario where I think central banks are going to come back in and do QE again. I think that's where we are headed eventually. And you could have a situation where the fundamentals look so bad and horrible, but then you can have the equity markets just flying, just surging. And people are going to say, well, that makes no sense because it hasn't happened in the last 10 years or the last 30 years and that. But again, we are moving into a different experience that we haven't seen
for crypto
before.
as well.
I don't know. I mean, I'm really neutral on it. We'll have to see. It's it's a liquid market, but I still don't see how it protects somewhat against inflation and stuff like that. I mean, we all seen the chart overlaid against the Nasdaq.
Yeah. How dare you again?
Yeah,
Oh my
yeah.
God, the tomatoes.
I just think, but Steve, but that
Not a
the whole
function of
conversation.
liquidity, though. No, it's basically just a function of liquidity. It's like,
I think so.
Central banks control print and number goes up. That's it.
Yeah, but the people who are really, keen on one market, over everything else, um,
Oh, I mean, it's a religion for sure.
if that person wants to put all of their money in one market, then and they go up, 100x, good for them. If they go down, you can't go down 100x, I guess, unless you're leveraged. But yeah, I don't think a lot of people do that, with their hard-earned savings. So I think there is a place in someone's savings for a market like that. But there's a lot of euphoria with it and everything. But as for this belief that market's going to protect you against this and that, well, we'll see. We'll see. There might be other ways to protect it. Maybe. But the point I'm making, though, before you did a pitch for that market, was that we could be going into an environment where markets are going to be moving the markets will be moving not based on anything you've seen before, and it's all going to be based on the capital trying to run away from the bond market, which is the biggest market in the world. Because remember, if central banks go in with QE, they're crowding out private capital, and that's going to have to go somewhere. And equities could attract a pretty significant bid with that. So you could have markets going up when the economies are just struggling and all this other stuff. Again, it's this volatility theme, the volatility theme that we've been talking about.
How do these guys keep a lid on yields? Like if you're a central bank or obviously a major country, I mean,
that's easy.
Your sovereign debt
Control P. You can buy the entire market, and then the yield curve is flattened. You don't have to worry about it.
Sovereign debt market is critical.
But let's just say Bank of Canada, they do QE, and they're going to buy the 1 year, 2 year, 5 year, 10 and 10 year in Canada, and it's flattened. So then currency could potentially absorb it, and have a wacky economic experience, which is likely not positive. So then you have the commercial banks, and that's where you look at mortgage rates. What are they going to charge? They're going to say, what the heck is going on here? If the 10-year is at, say, 5%, maybe they're going to charge 10, 12% for a mortgage if they were doing 10-year terms, for example. Again, we're going to go to an environment where if the Bank of Canada eliminates a market in government securities in that borrowing world, in the interest rate world, then the banks have to take on the risk and make the decision. And they're in trouble because they're trying to base it off a spread, and that spread is
If
anchored.
if you're the bank and you know that central bank's always going to be right behind you buying, you've always got a greater fool to flip it over to.
Yeah, you can package it up maybe, and again, but I think everyone is going down this exact same path, and the eventual outcome is it's going to be a crisis in the government bond market. That's where we're headed.
I mean, is Japan not like 10, 15 years ahead of us?
Yeah.
I don't think you can compare Japan. We're gonna have.
Here we go.
Here we go.
You cannot compare Japan to a country like France. You can't. I think Japan.
Rich, we can and we are. Forget about it, man. Accept it. Japan tried to raise rates by 10 basis points, and the world just, fell to its knees.
Yeah, and what? There's no there's been zero political fallout. There's been zero economic fallout. Inflation's relatively stable at 2% in Japan.
Man, I was reading that their population has declined like last year, almost 1 million people.
Yeah, it is. I mean, it's a shame we can't do like Loonie Hour, like 5-year themes. Who knows if who knows if the world will be
they're
here?
losing like 1 million people a year. Canada's adding 1 million a year.
Well, it's the same thing with China. To me, I mean, there's a lot of headlines about Japanese population growth, but I would argue that that's a relatively sort of known phenomenon. And Keith's always right. I'm not always right. Excuse me.
Well, what's it again?
Sometimes right.
Put that on rewind. Put that on one of those short things. Rewind. Keith is always right. Keith is always right. Right.
I did
He's
not
right.
say that.
And that's a wrap.
It's sometimes right. He's wrong about Japan. What I meant to say was it's like if you get a dramatic change that's sharp, that's often what screws people up. And so people have known, and Japanese have known, that population's been going down for a long time. What is a new piece of information is, in my view, the Chinese population number that's going to accelerate to the downside. And they don't have a similar situation. They haven't gotten rich before they've gotten old. They, that people are trying desperately. Japan has a relatively free capital account, so they can deal with fluctuations relatively easily. China does not. So I think that's a really sort of a much different scenario.
I find what's Rich back in school there is his thinking has gone back to sort of high school level. Steve, bring us back to your thoughts there a few minutes ago.
China long bond right now is at like levels last seen during the global financial crisis, is it not?
Yeah, 10-year broke 180, which is a huge deal, and they're about to issue 3 trillion more yuan to fight. Basically, they're just going to start stimulating all kinds of stuff to basically reinvigorate their economy. It's not clear. They're dealing with a balance sheet recession.
How do you get your way out of a debt problem, a debt crisis?
You default on that debt.
You issue more debt. That's what they're doing. That's what they're doing. Yeah.
Right. But you need to write it off, and they're not going to write it off because they don't. I mean, they would have already, in my view. But China's a really interesting theme and economy going forward, because at the same time that they're having a massive collapse in their real estate market, they're dealing with a balance sheet recession. They've just taken #1 spot in the global EV and car export market. You know what I mean? And then every single day that they're competing with Taiwan.
So why can't we buy a cheap one here in Canada?
Because we just put 100% tariffs on EVs to save the planet.
I thought the Americans were the only people that use tariffs. This makes no sense to me.
Oh, no. It's unbeknownst to many Canadians, Canada also puts tariffs on people and places and countries that they don't like. We're just quieter and nicer about it, I suppose. But I'm just saying, like, to ignore the Chinese car market and its knock-on effects on the German industrial complex, the U.S. industrial complex, how it's affecting the world's auto market is something that's really, really, really important. The auto industry employs. Sorry, go ahead.
China EVs bad. Canadian natural gas bad.
Canada oil and gas bad.
Come on, we want to go fully electric EV by 2035. So we're going to put 100% tariff on Chinese EVs, which are well ahead of the game.
Yeah, they're beautiful.
And meanwhile, we're also going to put a carbon tax on exporting
But if carbon is
Producing.
also bad, why would we be upset with the Americans putting a tariff on our energy to export? Because then, in theory, we wouldn't
Yes,
export.
that's right. We
I'm
should.
just
It's
so
amazing when you
confused,
actually pull
Rich.
the threads and you actually think about it.
It's nonsensical. It's nonsensical. Hopefully that'll be a theme for 2025. Canadians will stop self-flagellating over our oil industry. We're the fourth largest oil exporter in the world, and maybe that'll be a theme going forward. I actually, you know what? I think I'm putting a high probability that that will come to fruition in 2025. We'll stop apologizing for producing oil in Canada.
The Chinese are producing EVs at scale by burning coal.
Yeah, they are. But I'm okay. Like, all jokes aside, I think the impact it's having on the German industrial base, which is 25% of Euro area GDP, the knock-on effects to Poland and other countries around there that all are impacted by this, I think is a really, really big one. How they're going to fund the EU, impacts on spreads in Europe, and we know Keith's view on the fantasy land, and to me, it's another sort of nail in the coffin on that economy. I think that's a really, really important theme that will go. Maybe it won't be next year, but certainly the year after.
And one more theme that we won't go to a lot today. We'll come up with it, but I don't want people to think, "Hey, you guys missed this one. It was the biggest one of the year." Global conflict. It is.
Oh, yeah.
It continues as we speak. Various. I don't know if you're following what's happening with the fiber optic cables and things being.
Yeah, I was right.
What?
Well, a Chinese tanker dragged his anchor across one of the power cables in the Baltic Sea or whatever. Did you not read?
Yeah, but another
that?
one. Yeah, but obviously, yeah, you have that happening.
I was honestly
yeah,
that was insane.
It's
Totally
big, and
nailed
then
that
you also
call.
have, Norway cut off. They're stopping their, distributing energy to the EU, sorry, to the European grid, and so forth. In Moscow, I think yesterday they grounded all 4 airports. There's a lot of little things that are happening, and you know what they say with the little small drinks that you can get, like in the hotel room.
What do they say?
Well, a lot of little small drinks add up to a really big drink.
Is that what they say?
Does
I've
that
never
make
heard
sense?
that.
I
I
guess
think that's
that
not
makes
a good
sense.
one.
That
You see, you're not
I
always
think
right.
the point I'm making is, yeah, I'm always right. No, but again, the probability of global conflict accelerating,
Yeah.
again, it remains high because we're not seeing anything that's suggesting it's going in the opposite direction. And that should have a pretty significant effect on currency markets as well. And that's it, boys. That's all from my side. Steve, you still haven't said your last thing you want to say.
Well, I mean, I'm just gonna say final conviction I have just to round it out is when we talk about housing again, I think it's really important to understand and articulate where the real problems and the crisis is brewing, and that's I'm not gonna say exclusively, but it's predominantly concentrated in the new construction pre-sale market. That market is a mess, and that market and the bulk of that mess is actually located in the GTA. So just to summarize here, the number of condo units that were pre-sold in the GTA this year is at a 27-year low. There was fewer than 5,000 sales this year, fewer than 5,000 pre-construction condo sales this year. The 10-year average is around 22,000 sales. So like it's falling off a cliff. There's been 75 condo projects that are currently on hold that were supposed to launch. So this is what's happening in the pre-construction, new construction development space. It's a mess, and it's predominantly focused in the GTA. So when you hear about crisis and people going bankrupt and losing, a couple $100,000, $1 million, like it's almost exclusively going to be concentrated in the pre-construction, new construction market, which of course the Canadian banks carry a lot of those loans. So, yeah, that's your crisis. Housing starts in Canada will roll off a cliff in 2025.
What was that thing that Rich mentioned a couple minutes ago? Keith is always right. Keith is always right. That made me smile.
I think that's
Oh boy.
Oh, I got to say one more thing. See
What?
you next year.
Oh yeah, see you next year. Thank you, everybody. Thanks for everybody for another year and your support and all your emails, which I try desperately to write back to everybody.
I don't know if are we on year 3 or year 4?
I don't know. I can't count.
Loonie Hour
is always
math.
right.
Keith is always right. All right. As always, guys, we appreciate the support. I want to wish you and everyone's families here Happy New Year. Again, if you've enjoyed the Loonie Hour podcast, you've gotten any sort of value or entertainment out of the show throughout the year, all we ask that you share it with at least one person in your holiday get-togethers here over the next week, and we'll continue to build the Loonie Hour community one by one, and we'll see you next year.